Hello, Faced Warriors. How's everyone doing today? Let's have a good one. You know what? Let's have a great one. Hope everyone's doing okay. Had a decent turnaround Tuesday. Perhaps you went with my idea of shorting the dollar up here yesterday morning. Decent scalp. We'll see if it turns into something more. This is actually my big picture that I share with my mentees and in the dollar here. So now I've tightened up stops. I always take partial profits at about 30 points in the dollar. I've lowered my stop. I'm going to get out over yesterday's high 45 if we take it out. But I do think, especially if we take out this 98 level, some type of spike happened last night, that we could have something like this from in here. If we don't take out this high, it failed right between 61.8, 78.6. Um, Euro stronger than cable, although that changed intraday. Pretty wild action in cable yesterday. I think there is a possibility if we get a fib extension of this. I know I'm getting ahead of myself, but I always do that. That there'd be a possibility with so many dollar bulls right now to have some type of shakeout, especially back under 97, that could take us back under the 96 level right here. And I'd say that anyone who's a positioned dollar bull right now and they're macro, they probably have some sell stops here and in here, but for sure here, which was the big wave that we just had. So if we could have some type of decline in the dollar all the way under this low 96, it would shake out a lot of the bulls, and it's pretty unanimous, the bullishness in the dollar. So we'll see if this could happen. Now, I don't think this would be the end of the bull market in the dollar, but it'd be enough to cleanse all the enthusiasm of the bulls here. And then maybe from here we get that last big wave in the dollar. A lot of the dollar bulls are talking about for, like par 102, above par. So we'll see. It has to do a lot of things for this to occur. Looking at the end, I showed this Monday, this ascending triangle, and yen was weaker with the dollar, still filling out, didn't really give up much ground. It's on about 40 yesterday with the sell-off that we had in the S&Ps and bouncing back with the S&Ps. You still need this close over this 107 area to give you kind of an all clear for a move. And Paulie's got a decent area that I hadn't thought about before, and Steve showed it too, up around 107.80, 108. But this actually measures up to about 109, which was another major failure up there a couple of times at the 109 level. You could see it here. See, 109, 109. This was really the big failure. So we'll see. We're approaching the Jackson Hole event. And, I know that Paul, I don't know, but I've heard Paul doesn't want to make any news. Hi, Alina. Double top in Dixie. So Sean's looking for maybe another rally back to the old high. Okay. Look, guys, all of your ideas and my teammates' ideas, one thing I've learned is anything and everything is a possibility in this business. Okay, so all we could do is our best to come up with good entries and manage the risk and probe and protect. Okay, so I would call what I'm doing right now is probing the possible scenario for a decline in the dollar. And when it went my way for 25, 30 points, I take a little off the table, half off the table. And now the worst thing that could happen is that I make 25 points, 30 points in the dollar index. So I'm protecting it. You never know if a high ends up being just a high, temporary low, or an inflection point. That could only be seen with a rear view mirror, right? Hi, Steve. Gerardus, welcome to Face. Nice to see you in here. It's great to have Steve back. I know Blake's going to say, Blake's surprised. I'm so excited that Steve Volge is back, but I miss everyone on the team when they're not around here. It's like the NFL. We're teammates. We all pull for each other. Okay, so also want to touch on crude. There was a nice little scalp. Yesterday when I was talking, I thought crude had already topped and said you could sell a bounce at 620. So I did it and made a little money. And then I put some back out in here. So I'm underwater on my 625 sales, and looks like I'll probably get stopped out. So the big picture in crude looks like it may end up happening here. And that's this descending triangle line that comes in around 58.5. So right now, I just don't want to risk that much to 58.5. I'll be stopped out over these highs here if we take these out. And, that's a possibility if the S&Ps are going to go for these stops over 40. This little late sell-off surprised me a little. I still think that there's a chance that Powell's going to accommodate not, political pressure from the administration, but accommodate the bond market and try and get this yield inversion to stop for a while. And he may really be dovish. And if that happens, I think that we could take out some of these stops. And 2960 is a very important area in there. And I don't know what to do with the gold now. It's sideways. I know what I would do if we went to new highs. I know what I would do on a break, but right now the metals look like no man's land. And again, you have to keep an eye on the yuan. And as long as the yuan is not surging to new highs, there's a chance for risks to continue to be okay. If I'd say we'd have a risk in all clear if we negate this breakout that we've had here in the yuan, and we're pretty far away from doing that. We've actually tested it at last week's lows, and we're having an up week right now. So this is the key. If you're a bull in stocks, you want to see USD yuan have this be a false breakout. So draw a green line there, and if you see it starting to close back under there, could be a good trade too. So that would probably mean that there is going to be some type of cooperation. But as long as this breakout holds, you got to give it at least, almost looks like a cup and handle or a right shoulder, doesn't it? Or an ascending triangle, another triangle. I've noticed sometimes, because I've been in the business about 5 years, is that when you start to see triangles in one thing, you'll start to see them pop up everywhere. So, there's your ascending triangle, and here's your breakout. So that's really the key, because this is what got the correction going, and we need a continuation move, the correction in equities, for the correction in equities to continue. I mean, if you just look at this, it could be a huge move, right? 630, call it 70. I know there are a lot of people thinking in an extreme case we could trade 720, 725, but this actually measures like 770 or so. So it's really an important thing if you're an equity trader to be paying attention to the yuan right now. Any questions before I turn it over to Blake? Bond charts? I'm going to let Steve handle that. Oh, Sean, that's great. From Blake and Steve? That's really nice. Okay. All right. Well, let's have a great day. And, I'm just like you guys right now, you come in here, you have your ideas. I come in here, I have my ideas. But now I have the sounding board of listening to, analysts and traders I respect and get to see what they're seeing. and it either is going to confirm what I'm thinking or give me food for thought to consider another alternative to what I'm thinking. Correct? So, let's get going with Blake. And God, I saw a picture of you with your oh, look, Sean Murray said joining ForexAnalytix, Blake. Sean is saying it's the best dollar ever spent.
Great.
So,
that's awesome.
Yeah, so we're, we do get a lot of nice testimonials from people that are with us that, and we don't even put them up on our website. And it's sure nice to, for people to thank us by joining and trying us out, giving us a shot. So thanks for giving us a shot. And I saw that picture of you and your son. He looked pretty relaxed driving there, Blake. You look like, how are you?
It was more of a joke picture.
Okay,
I'm doing fine. I'm actually
like a natural, like an Indy driver.
My oldest son, who is learning how to drive right now, he has the, if you have kids, you kind of know what I'm talking about. There's when he was like 2, I bought him like a motorized Jeep or whatever it was, like a motorized vehicle, and it was great. He was perfectly like at home driving that thing around. He didn't run into much, he got it. He got the concept of driving. My younger one, who's 12, that's going to be more of a scary experience. I'm thinking, in the future. So, he's going to be the one that I'm more worried about. I was just kind of sending a funny photo to my wife, and but actually, for his first day, he did a great job. I was actually quite impressed, and this is one of probably 50 different times I'll be taking him out in the next year. So
it's a rite of passage. I remember how excited I was to get my driver's license. How about you?
Oh yeah, I mean, he was explaining to me like how cool it was, and I'm like, it's freedom. You have your vehicle. And I remember when I first got my driver's license when I turned 16, I drove up the mountain to, I was on my own, and it was freedom. It was really just freedom, and I really enjoyed it.
So the Morrow family will finally have a good driver. That's good.
That's a good chance of that happening. Finally having a good driver. Yes. Good morning, Stelios.
You got a designated driver when you want to have a few, Blake.
Yeah, I mean that's actually the one upside, because I'll tell you, the upside is not higher insurance costs. Not more gas money, not buying another vehicle, which I'll be doing here in the next few months, is I'll be buying him his first car, which will be big and old and capable of running into things, and not just trying to stay in one piece. I think
being the son of a Marine, he would expect to get a tank.
Hummer, no Hummer, no. It'll probably be like an old 4Runner. I think something that's some Toyota that. Yeah, that'll run forever. I'm a big fan of Japanese cars. I am, because the dependability. Yeah, I mean, they just are, it's just Japanese engineering is wonderful from a,
it's amazing we won the war.
They make great vehicles that are just dependable. So anyway,
but what do you think of the yen if you like Japanese cars?
Oh, I'm always buying yen.
All right.
What'd you say, Steve? And good morning.
Good morning. You said they make great vehicles, but since Dale mentioned the word, I said, but they make lousy allies.
Oh yeah. Nowadays we'll take anyone we can get.
That's right. That's just a good point. All right. Well, let's talk a little bit about the market. It's sleepy town in this market, and we have the FOMC meeting minutes later today. So we do have Canadian CPI. Let me just double check that. Yeah, we have Canadian CPI coming up in the next 15 minutes. So we'll take a look at the CAD here in just a bit. But if you guys, some of you follow me via Twitter, and you might have seen this yesterday, and I want to put it on the screen for you. Some of you saw that picture. It actually got quite a bit of likes. Dale, I know it's getting you a little excited. He might have stepped out for a second, but do you know what that? Somebody tell me what that represents. You guys are maybe laughing at me, but what does that represent? Anybody?
Feminist argument?
No, anybody? No, I'm talking to anybody at home. Like, you can chat, you can go in the chat, or you can go on the.
Oh, you have Euro USD above it, so I have no idea, Blake. You're so twisted. What is?
I know it says Euro US dollar, but what does that mean?
I think Jack and David have got it.
They do.
Alex, some people have got it. Yeah.
A lot of people could not figure this out. Like, what is that? And I do stuff to throw off the algorithms every once in a while, because I know algos follow me and they follow other high profile Twitter people. So I try to be a little obscure about what I'm tweeting at times.
Yeah.
That is a double bottom.
Oh.
Double butt. Yeah.
Okay.
Get it? You guys get it? Funny, right? It's a double bottom. Yeah. So anyway,
it's a big double bottom.
Yeah, that ain't no lie. It's do you see the little caption that says "People of Walmart," which I don't think is too far off either. If you've ever been to Walmart, but if you can see, I was looking at this hourly. This is a double bottom. Now it's only a double bottom actually if you break above 111.15 or 111.10. But if you look at what and I'm just trying to be realistic here today. If you can think what happens if you break above this neckline here, then that puts us back up at the breakdown point, which is 111.60. So I don't think that's too far off. And if the FOMC Atay says put on a caption, then no, I'm not going to put in a caption because I don't want people to read algorithms to read my tweets. You get what I'm saying? There are actually algorithms, just so you guys know, there are algorithms in the markets that actually read social media, and if I put in euro dollar double bottom, and they know I have a lot of followers, which I do. If you don't follow me via Twitter, I've got like 53,000 followers. They'll be like, Blake says it's going higher, so therefore we're going to short it. Okay, so I try to stay away from that. Those dynamics. So anyway, but yes, very cryptic. I was trying to be a little cryptic there, and but it's also out of humor, and hopefully you guys get a little laugh out of it. But anyway, what I am looking for though is a move back above 111.10, because you guys know this is a pretty big resistance right here. A move above there, and I bought some last night. I bought some on a dip, and I didn't buy more because actually my bid was my bid to add to my position. Believe this is 111.86. I already canceled my order. 110.86. So about a pip below the lows, I had another bid to buy some more, and of course they missed that one. So the market's pretty good at sniffing out, not me necessarily, but I guess I would call myself very average, and I probably put my orders where everybody else is putting their orders too. So, but anyway, I am looking at the euro dollar as a possible breakout. A breakout above 111.15 today, roughly 111.20. You should get a decent pop. And if you're talking about the FOMC minutes, and the minutes really spell out the idea that the Fed is not just a one and done type of situation, and it looks like we are going to get rate cuts throughout the remainder of the year, then there's a good chance that the euro, excuse me, sorry, I didn't mean to yawn on you guys. It's just nothing going on in the market. There's a good chance that the euro trades back up to the middle of this, this descending wedge, which would be 111.50, 111.60. So that's what I'm looking for today in the euro dollar. Obviously, a break below 110.65. That would take us right back down to 110. Okay. All right, pretty simple stuff. As far as the cable goes, the cable started to squeeze a little bit yesterday, but same story as yesterday. We are really confined, capped by this 122 level. 122, 122.20. We got to get above that, and then that takes us to channel resistance. But really, I mean, if you think about it, this pink line right here. Oops, not that one. I didn't mean to move that. The pink line right here. Let's grab that pink line right there. That really has to be broken in order for the cable to turn higher. I mean, in all actuality. So we have to break above that 123.85 level. And that's a long ways away, and I know a lot of you are like, well, let's just buy down here because it's so close to support. But what's to say that the Boris Johnson doesn't say something and we trade at 118 before we trade back at 122? I mean, there is that possibility. I mean, so if you are long the cable, you just have to be careful. You have to be a little careful about being long the cable, because I'm not 100% confident that the cable's going higher yet. So anyway, there's just some food for thought. All right, let's talk about the Aussie. The Aussie is actually a little firmer today. The Aussie's trying to break a little triangle resistance, and you might be able to take it up and say, well, it still hasn't really broken out. But the Aussie is it's firming up. And is there a chance we move to 68.30? Yeah, especially if especially if the euro catches a bid and we get to 111.20, 111.30, 111.40. It's a good chance that the Aussie is going to follow the euro higher as well, and we could make it towards the 68 35. I really am having a hard time being bullish the Aussie, but that does not mean that intraday we can't get some sort of squeeze higher. That I think it's entirely possible. So don't I never look at a currency pair and say, oh, it's in a downtrend, it's never going to bounce, or it's in an uptrend, it's never going to pull back. No, but most currencies, when they're going up or down, they tend to take 2 or 3 steps forward, then they'll take 1 step back. That means they retrace a little bit, 2 or 3 steps forward or backwards, whatever, however you want to look at it, up or down. But they, in this case, the Aussie is definitely trending lower. So yeah, I mean, we may have gone 2 or 3 steps lower, and we may take 1 step back, and 2 or 3 steps forward. I mean, we are still locked in a pretty steep downtrend, but that doesn't mean that we can't be in a retracement right now. Now let's talk a little bit about the Canadian. I've mentioned to you guys, I'm not super excited about the Canadian. I'm not. There's nothing about the CAD that excites me yet. That's not saying that something won't excite me. It's just, you think about what's happened in the Canadian, which is basically nothing. In order for me to get bullish the dollar Canadian, we'd have to break above the 618, this one right here. See that one? So we'd have to break above the 618 for me to even get excited about any possible upside. The flip side is, for me to get bearish the dollar Canadian, we have to get below this channel support. And also, in order for it to break lower, below this channel support, we have to have a catalyst. Is it stronger inflation today? Maybe. I mean, if we have a strong, stout Canadian inflation report, maybe that's the catalyst that drives us lower. But I would think that stocks are going to have to play their part. We're going to have to see a stronger stock market. We're going to also have to see stronger crude oil. Now, if you look at the stock market right now, if you look at the S&P is up at the moment. Okay, we're coming right into some pretty key resistance here in the S&P, but the stock market is a little higher today. You got crude that's higher today, so maybe that does the trick and actually puts the dollar Canadian lower. You add stocks and crude, and then a stronger inflation number, and maybe that's the catalyst that actually drives us down. I do remember from last week, if you guys don't recall, this spike lower in the dollar CAD, it looked like it was actually going to break down outside of this channel. You can see it right here on the 13th. That was that Thursday? No, last Tuesday. I'm sorry. So it was last Tuesday. It started to break down, and then all of a sudden it just reversed course, and we're right back up in the channel again. So it's hard for me to get super excited about the dollar Canadian right now. I want to see further evidence, but we do have inflation data coming out in a few minutes, so we will monitor that. Let's see. Oh, the dollar max. I'm still bullish. The dollar Mexican peso. The one thing that we have to note is we rejected this resistance here. You can see that resistance, that high, and also it was 127% extension of this range. We hit that as well. So we pulled back, but I still think it looks constructive. But with stocks stronger at the moment, it's keeping some downside pressure on the dollar Mexican peso. I'm gonna take a real quick look at the U.S. dollar Japanese yen, and the dollar yen looks exactly like the S&P right now. By the way, let's look at that. Here's the S&P intraday. Okay, just let me grab the drawing tools here. Okay, so you can see how we're getting this up down move with the S&P. Sell off, rally back to resistance, sell off, rally back to resistance. Well, the same can be said for the dollar yen. Sell off, rally back to resistance, sell off, rally back to resistance. We're just doing the exact same thing. So in order for the dollar yen to break higher, through that previous support over here at 106.85 roughly, in order for us to break higher, that means the S&P will have to break higher above this 29.30 and maybe even all the way to 29.50. I mean, we're going to have to see it really, break higher in order for, the dollar yen to follow suit. So that as far as the dollar yen goes, that's what I'm paying attention to currently. Now we do have, like I said, we have Canadian data coming out. Stelios, I want to say good morning again.
Good morning.
How you doing?
I'm very well, thank you.
Good. And I think Steve is here, but I'm going to cover the analysis.
I'm here.
Okay.
Hey, Steve. I know you are with your nannies on vacation. Is that what's going on?
Yeah, that's the case.
Greeks tend to, well, all Europeans tend to vacation a lot in the month of August. It tends to be the case, so it's not surprising. So Stelios
Yes.
and I are here, and we'll cover this retail sales really quick. And
yeah. Sorry,
go ahead.
Go on.
No. I was just going to say, and Steve, you just let us know if you need to step away, because I'll let you go over charts. But if you need to step away, just give us a holler.
Absolutely. I'm here to let you know if he's not under control. For the time being, he is.
Okay. So go
I
ahead.
have a few things to say. I'll say, but maybe one before the numbers, and then I carry on afterwards. So you talked about cable earlier, and the reason, I just want to mention the reason why I got a little lift yesterday was actually probably the reason, but Angela Merkel, following the statements by Donald Tusk of the EU, saying that, look, the backstop is non-negotiable, there's not going to be a hard border in Ireland. Angela Merkel yesterday said that, maybe we could discuss alternatives in a constructive fashion. So she seemed quite, let's say, willing to talk.
But didn't she speak out of both ends? It seemed like a very mixed message yesterday.
Yes, but whenever somebody like Merkel says something like that, which can be interpreted as being positive, the market will always like it. That's the way it's been trading. So that's what gave it a little push. But
keep in mind, guys, also that Merkel's role has always been, quite moderate. Okay,
we're
the
wait a
firefighter.
few seconds, guys. Hold on, real quick. Canadian data. It is at, wow, strong. Oh, wow. Look at that. Look at that dollar Canadian, like just like spike through those lows. Let's see if it can sustain. You know, you can see the CPI. Wow, that month over month, much stronger than expected. Year over year, much stronger than expected. It should be able to sustain some downside pressure. You know what pair I would be looking at right now? Not the dollar Canadian. I would be looking at the New Zealand Canadian.
Yeah, there you go.
This New Zealand Canadian is really threatening a big multi-year breakdown here. I mean, I was playing it the last few weeks, trying to play it as an inverted head and shoulder pattern, but frankly, we get below this 85 cents. It's going to be kind of ugly for the pair. But let's go back over to the Canadian, see if we're sustaining our break. Yeah, look, kind of weak, huh?
Yeah, we have to remind ourselves that in 2018 we got quite a few negative month-on-month prints, and now in 19 it's all, apart from one, it's been positive, so it's kind of stabilizing. So we were talking last year about inflation being a problem in Canada. Is it increasing? Is it improving? It looks like it slowly.
Yeah, but look, I mean, we're just retracing again. It's like, we can't even sustain any downside here in the Canadian. That's got to be a little concern. All right, let's see if it'll drop, but it's got to be a little concerning for dollar Canadian bears. It's like, wow, we got this strong Canadian number, yet no follow through to the downside, maybe even a false breakdown. I'm not saying that it can't break lower, but it would be a little nerve-wracking knowing the fact that the dollar Canadian's trying to break lower and it's just not doing it, right?
And with oil over 1% higher as well today.
Right. Like why? Yeah, exactly. Crude oil, and we got stocks that are stronger. Why isn't the dollar Canadian actually just, breaking through this 132.50 yet? Not saying it won't. I'm just saying that if I was short, I'd be, questioning why, why isn't it going down? So interesting. All right. Well, okay. What I'm going to do is, Steve, I'm here. I'm just going to put myself on mute. I'll let you take over, and I'm going to go get some coffee.
About Merkel, which we also know from because we left that in the middle of the sentence. What I was saying about Merkel, Blake, was that she's very conciliatory and she has every reason to be so. And one of the reasons is, I remind you that she's on her last term at the moment, right? We know that as a fact.
Oh yeah, she's done.
Yeah, she's done. But even when she wasn't, to be honest, because we know, there is even a great book out there, about the Greek crisis and, all the handling that happened. We know that Merkel was always, striving to find a solution, the least damaging solution. And, she had to use political capital to do that. So we know that Merkel, on one hand, is the most powerful woman in Europe after Lagarde at the moment. And I say after Lagarde, the only reason I say that is because, as we just said, she's on her way out, and we know that. But she has actually strived, to find the most conciliatory solutions. So I do think that it's not weird, that she might sound, a little bit more helpful to whatever Boris Johnson is trying to achieve. But on the other hand, I don't think that her opinion alone is going to change anything having to do with how the European Union handles the situation. What do you think, Stelio?
Yeah, I agree. And it's like we had Merkel and Schäuble, the two opposites, right? She was always conciliatory. Schäuble was completely, black or white.
He's very strict. So, yes, he's a black or white person. Yeah.
Guys, Steve, I disagree. I think it's possible that your wife is the most powerful woman in Europe to last.
Yeah, true.
Like you. What do you think?
Say again, Coach. Sorry.
That your wife is the most powerful woman in Europe to lasso a stud like you. I think that took some power.
All right.
All right.
Okay, I have a couple of more things to say, and then you can take over if Jason is still asleep. We had. Oh, he's not okay.
He's actually 50 centimeters next to me. So if you suddenly hear any singing or whatever, you know what it is.
Okay.
We're all here to back you up, man.
Yeah.
So we had some comments from Donald Trump yesterday, unsurprisingly, a bit conflicting. I read the stuff and I try to make sense of it. He said at some point that he would be open to a range of possible actions to stave off a recession, but there is no recession coming. That's what he said. So these are not needed. And then he said that the Fed should be cutting 100 basis points. So you tell me what that means, because I don't get it.
I really don't understand what confuses you. It's very, very simple. It's the best economy in the history ever, but it needs a lot of rate cuts, quantitative easing forever, and to be prepared for any needed measures for an upcoming recession. I think
just till a year from November. Not forever.
Elections, yeah.
Yes, yes, exactly. Right. Until November. After that, who cares?
You're right.
I personally am tempted to just ignore what he said, but he does move markets, so you have to have an eyeball on what he's doing. The other pretty big development was out of Italy yesterday, and remember we were talking about it on the webinar yesterday, and it happened basically the Prime Minister resigned yesterday because we had Salvini, the leader of the Lega Nord party. He has seen in the past months the popularity in the polls of his party rising dramatically. It's gone up to nearly 40%, passing the five-star movement. Remember, they're in a coalition at the moment, but the five-star movement had a slightly higher percentage last time around. Well, this time he wants to take the lead, and he basically lashed out at the five-star movement that he said they're not moving fast enough, they're not doing anything, and it looks like we're heading to either elections or the president is going to ask for a coalition government to be formed. The interesting thing is that the Lega Nord, they don't have that many friends, so it looks like they can't actually form a government at the moment. Obviously, this is quite fluid, but the five-star movement have been already talking with the Democratic Party, the party that used to be number one in Italy, and they seem to be ready to make a coalition if the Lega Nord cannot make one. So this gamble by Salvini might backfire, and he might be out of the government. So this is no matter which way you see it, this is going to be it's not going to be good for the euro. It's going to bring uncertainty. Although we have to remember, if there is a coalition of a five-star movement and the Democratic Party, they are both pro-euro. So this could give the euro a lift. If the opposite happens, then that's going to be bad for the euro. So I'm keeping a close eye on this, and it's developing from one day to the next. So we could have progress by tomorrow on this. So very, very interesting to see. And remember, Italy is not Greece. They have a huge debt. It's a huge economy. It's
2.4 trillion.
2.4 trillion, yes. So it's not to be taken lightly.
No, absolutely not. I don't think it's going to be a good idea to have, unintended developments there, because probably that's going to be enough to push the globe into recession. I mean, if we really have any issues there, I don't think that's going to be fixable, because it's one thing piling on top of the other. So if we start having uncertainty about what's going to happen in the eurozone as well, I think it's going to be too much for the central banks to fix in an anyhow extremely mature business cycle. I mean, the longest we've ever had in history, right?
Yes, sorry, I was muted. Trying to mute myself. Yes, absolutely, yeah. So let's see what happens. So that's all I had for today.
Okay, Stelio, good. Now I'm going to offer some chart analysis and some singing on the side there.
My daughters are next to me as well, so they might join in as a backup singers.
I just realized that, you know, I should have thought of that. I should have come there and we could have the webinar together. So at least there's one there's one person to take care of the kids at any given time.
Yeah.
Okay, so now let's see. I want to start by not a such popular pair, and that is actually the Aussie Kiwi. I know that Blake mentioned the Aussie before, and you know the probability of it, you know, rebounding a little bit higher. That is indeed, if you look at the chart, it is a possibility. Although it still looks bearish, it definitely looks a lot less bearish than the Kiwi. And by having a look at the Aussie Kiwi, if you remember, before I left for vacation, when we had that monstrous day higher, I said that, listen, you know, there is a very, very high likelihood that we actually found the bottom here in the Aussie Kiwi for two reasons. Reason one is the impulsive nature of that move higher. But the second reason is that before we did that, we actually spiked lower to take off the previous lows just momentarily. And I'm pretty sure that that was enough to take out of the market every single Aussie Kiwi bull that was looking at this move lower as corrective. I was one of them, and I didn't have a position.
I can attest to it. I was one of them.
Yeah.
So and that was a central bank move too that washed.
Exactly.
And then it was a central bank move that it exploded on.
Exactly.
Very tough trade to have caught. If you caught that bottom, I give anyone who did that the man award of the year.
Indeed.
Trader of the year.
Indeed. In the words of Duke Nukem, balls of steel.
Really needed them.
So yeah, I do see this move higher from the Aussie Kiwi, and you know, it looks like it might produce a higher high from here. It's moving quite nicely. We've now penetrated through the 50 and the 200 daily moving average. We're on our way to the 78.6. And, you know, the next resistance after that is the previous high at 1073. Then we have the 61.8 of the whole move lower at 108, and you get the whole picture. So Aussie Kiwi seems to be overperforming, and that's why if you have a look at the Aussie against the dollar, it's obviously overperforming the Kiwi against the dollar. Now, will it actually produce another move higher? There is the likelihood that, you know, we had that spike higher. We're going to have a little period of consolidation that we see here. We might see something like this, another leg higher before lower. Although you have to be quite careful, because this whole area that, you know, produced resistance and we've been consolidating below it is an area of resistance. So it's not that I'm advocating that somebody should be buying the Aussie against resistance. I mean, this makes no sense, but you can definitely, you know, attempt if you really like it, the upside. Personally, I don't. I mean, I believe that even if it spikes higher, there is a high likelihood that, you know, following that, it's going to continue on its way lower. But if for some reason, you know, you believe that something stronger is brewing here, I think it's better to buy it on a breakout above 0.6820, 0.6830. But even if you do that, as I said, I would be very, very nimble probably. The move might extend towards 69.20, 69.30, but I don't think it's going to be that easy for it to find some follow through. Now, if you overlay that with what the Kiwi is doing, you know, the Kiwi is obviously a lot more bearish. I mean, flirting currently with levels that we haven't seen since January 2016. So we're talking about more than 3.5 year lows at current levels. Obviously, the move lower has been, you know, overextended. I mean, I wouldn't be surprised to see some kind of rebound. So it's not that I would be sorting here at the lows. But one thing is for sure, the Kiwi remains quite bearish. Now, as I was explaining yesterday, so I'm not going to take much time here, the Aussie against the yen and the Kiwi against the yen, especially the Kiwi against the yen, they both show even more bearish structures here. You can see in both cases, you can interpret the recent price action as a bearish consolidation, especially in the case of Kiwi yen. I was warning about that since a long time ago. We've broken below multi-year lows. This horizontal support area, it's much easier actually if I show it to you on a weekly chart, because we can see a lot more data. There you go. So you can see how important that horizontal support was. Acted as resistance from 2009 to 2012 when we finally broke above it. And, following that, price spiked twice in different occasions, actually in different years, once in 2016 and once in 2019, this year, actually at the very beginning or at the very end of last year, whatever it was, to test that area and acted as support. And finally, we seem to be taking it out as support. So I think this is a big development from a technical perspective. So you can understand that Kiwi yen, Aussie yen, look even more bearish. And add to that the fact that I have no real reason to believe that the USD yen is done moving to the downside. We explained that yesterday. We saw the chart yesterday. I think that you should be very, very careful looking for reversals there. Of course, at some point, nothing moves in one direction, but I do believe that looking to sell any kind of rebound is the way to go. Now, I'm going to start by covering a couple of things that I didn't have the time to do so yesterday. And then I'm going to go through the questions. One of them was Euro Swiss. If you remember, we keep examining what's happening with Euro Swiss every 2-3 days, because it's nothing that moves really, really fast. But what remains the fact here is that since we found that high by retesting the previous floor at 120, in this case acted as a resistance, no surprise there. The Euro Swiss has been moving lower, either moving lower or consolidating horizontally. But, despite being a slow mover, it's definitely been in this downtrend now since last April. So it's more than a year that the Euro Swiss has been dripping lower. The reason I keep examining what's happening here is actually there are two reasons. One of them, it is a proxy to see if there are any stresses having to do with the European and mostly Eurozone economies. But secondly is because it's, a good guide to know if you would rather trade the USD Swiss or the Euro USD, depends on which direction you're looking at. Okay, so for example, as long as the Euro Swiss remains under pressure, which means that the Swissy is quite strong, it's obviously a better play to be short the USD Swiss instead of being long the Euro USD if you're looking for that. Okay, and that's why I'm looking at it like this. And a testament to that is the fact that if you zoom out, you can see we keep examining every day what's happening with the Euro USD, although that's not much. But you know very well that the Euro USD still remains trapped within a descending wedge, while the USD Swiss has done the move breaking below the equivalent ascending wedge, because don't forget that they're inversely correlated a long time ago. So, the USD Swiss, it's not that it's a big mover, but it's definitely moving lower faster than the Euro USD is looking to move
Great mentoring,
higher.
Steve. That's a great lesson. What you could learn from a pair combination like that. So that really is something people should write down and pay attention to. So also, do you get kind of like market tells, like, the Swiss can't rally when, other dollar pairs are?
Yes, very frequently divergences
Okay.
or difference in timing are good tells. For example, USD Swiss has broken lower from the equivalent wedge, and it doesn't seem it wasn't like a 1 day or 2 day spike. I mean, we remain below that for some time. It makes me feel like there is a higher probability for the Euro USD to eventually follow it higher by breaking higher than by breaking lower. You know what I mean? So
I
yes,
do. It kind of leads. It's leading the parade.
It is leading the parade. Yes, it is leading the parade for the time being. Yes.
See, I learn every day.
you know a lot more than the average person. That's the only
But
truth.
I never really I noticed it in the Swiss, but not by comparing it, just using Euro Swiss. I'd look at both. I could now just use that pairing to get the picture for both.
And since we went into the conversation about Euro USD correlated pairs, there is one more to examine here, and this one, and I have to mention that Blake, as you know, Blake writes daily or almost daily the chart of the day. So if you go to ForexAnalytix, and that is free for everybody, you don't need to be a ForexAnalytix member. If you go to ForexAnalytix and you go to blog, you'll see that the most common article in here is this, called chart of the day. So yesterday's choice from Blake was the USD Swiss at the end of the day, yesterday, at the end of the US session, by writing that perhaps, we had a false break higher. And especially if you have a look at it, today it seems to be producing follow through so far on the daily chart. What we have, assuming that we're going to close like that, which is, quite early to assume on the day, but, it's not unlikely. We have a potential evening star formation playing out here. So, but I wanted to show one more thing here, that we also had an ascending wedge in the USD Swiss. Keep in mind, USD SEC. Keep in mind that the USD SEC is inversely correlated to the Euro USD as well. But as you see, it's been a lot stronger than the USD Swiss. But keep an eye on this ascending wedge. I know that at some point we had an overthrow here, but other than that, it's been playing perfectly, both the support trend line and the resistance trend line. And once again, we got rejected from the confluence of this ascending wedge's resistance, the previous high that we had here at 968 and change. And add to that the fact that, as I said, we seem to be registering an evening star formation on the daily chart. And it looks like a nice risk-reward play for a move, at least towards the wedges support. And if that ends up breaking the downside, I think it has a decent probability of producing very nice follow-through. Of course, if something like that starts playing out, it's also another signal that you should expect that Euro USD might end up breaking to the upside. Okay, one thing is for sure, I don't know if there is any decent risk-reward ratio for playing the Euro USD as we speak, right here, right now. At least not in the time frames that I'm looking at. Because I'm a longer term trader than Blake is. Blake is often scalping the markets. But there is very decent risk reward for playing the USD SEC from current levels. So that's why I wanted to show it and mention it. Now, let me have a look at a few of your questions. And by the way, here is the Euro USD. You can see that on the daily chart, we're close to support. But, oppositely than USD SEC, we had a lower low here. So you can also view this as a divergence. I mean, the USD SEC did produce a higher high, while the Euro USD did not produce a lower low. So, you can look at that as another type of a signal. Okay, let me go through your questions.
I call those poker players. They're tells.
Yeah, indeed. Maybe
important. You know what I mean? And it's great to have them, because then from your tells, you go to your biases. It gives you your biases.
Well, I totally agree. Maybe important to note as well, Steve, is the fact that the S&P have becoming active in the market again, stabilizing the fall, so to speak, after having taken a backseat for quite some time lately. I do agree with you. It is extremely likely that the S&P is doing stealth interventions in a very discreet manner to make sure that, the move lower in Euro Swiss is very, very orderly, because they definitely don't want to attract attention in the market and make it look like the Euro Swiss might be a good trade to the downside. So I do agree with you. If we know one thing as a fact, is that Euro Swiss is not going to have any brutal moves to the downside, because S&B is on the lookout having to do with that. Give me a second, please. Coach, coach, are you here? Καλά, εντάξει. Blake? Okay, so Europound. Europound did find support at the previous resistance area. So, from a risk-reward perspective, it would look nice to play to the upside. Am I sure it's done moving lower? No, I'm not. So, I was looking before I left for this level as possible support, but it is likely that we might produce something like this. So now perhaps this little rebound higher, and perhaps another move lower to retest that area before higher from there. So something like that, because we had a question about Europound. And that is what I think is a bullish scenario, but that's not going to play outright. There is always the potential that we just rebound, straightforward from here. Personally, I see this move like a quite impulsive one. So I do think there is one move missing to the upside. Sorry, one second.
Okay, I'm here. Don't worry about it. Hold on, guys.
Yeah. Sorry about that. As I said, today is a weird day.
Okay, so we all have distractions.
Yeah.
And you know what, Steve?
I have a crying baby. Sorry.
I've had people have distractions that are, don't have as much.
Don't worry. I think
love connected to it. So yeah. I mean, we're almost at interview time anyway, bro.
Hey. Yeah. Anyhow, thanks, guys. Now he's more calm. So
because your time is up, he comes.
Can you hear me?
Yeah. Right. Yeah. Oh, okay. We can hear you, Paulie. We're gonna hear you,
Paulie.
Well, it's time for the interview, right?
You want to take a couple minutes? Anything you want to show?
Yeah, just one more thing, Coach, and then you can take it. It has to do with Euronoc. We were showing Eurosec. We were showing. I focused a lot on Euro pairs and correlated. So I wanted to also show Euronoc. We already showed Eurosec. Look at this. Also, at quite a critical juncture. Look at this ascending wedge. Dates back to 2013. It's massive, right? Massive. So, you like it to the downside, this is the place you want to be trading it. Now, if
there was a primitive time of trading, because that's before ForexAnalytix even existed.
Yeah.
You knew I was going there, right? All right, go ahead.
Yeah.
How did the market survive without us?
No, it's a good question, right?
All right, anyway.
Okay, we also have a question. Let me see, as long as he's quiet. Let me see.
And I see you, Barack.
EuroCAD. So EuroCAD, I mentioned that yesterday. EuroCAD, you like it to the upside. Personally, I wouldn't be trading it at all, because it's like two weak currencies, once against the other. This is your opportunity. Broke above a wedge, corrected lower in what looks so far as a pennant. So one more move to the upside, quite a likely scenario, right? But do I like this whole structure? Would I be, really looking to trade it one way or another? Nah, probably not. Probably a much, much bigger formation in play here. You can see it. Something like this.
Yeah.
So I think that, it might produce some kind of a nice move later on, but, not yet. Do we have an interview today, Coach?
We do. We have Barack Kaplan with us. If you like channel work, stick around.
Yeah, personally, I like channel work, and I would gladly stick around.
I know. Well, I know you're busy.
I have a little koala on me at the moment.
All right. Well, thank you, Steve. And
thank you. And sorry for the
great to have you back. And okay, Barack, I'm going to promote you. Bet as a trader, you haven't had a promotion in a while. And then I'm going to unmute you. And really, I'm really not just patronizing you. I really do like looking at your work. So welcome back to Face, Barack, at Trading Channels. So Zoom, you'll see a menu for the mic. I've unmuted you. And then you just hover your mouse over the drop-down menu for the screen share, which is a green box. So you are unmuted, and you're going to have to select what kind of audio you're going to use. Mm-hmm. I think I hear you.
Do you hear me now?
Got you, Barack. Welcome back to Phase.
Thank you very much.
Is this your third time?
Yes, this is the third time. Great to be back.
Oh, well, then that's it. 3 drives. It's
exactly.
Complete. You've completed your mission on Face. I'm just kidding you.
Is the third, the third
three
one
is the number of 3 is the number of completion. So thank you very much for fulfilling your mission on Face. So I told people if they like channel work, Barack, to stick around to see these looks. So I'm not going to go back and ask you about your journey. Let's get to what's on your radar and what you're seeing. Okay, buddy.
Thank you. So as usual, I'd like to start with the indices. Then we go on Forex and commodities. I will have probably, how long do I have, Dale? About half an hour or?
Yeah, as much time as you want.
Okay.
You're the captain.
Thank you. So this is S&P. The daily charts. It's kind of came very close to the black resistance and reversed. I was expecting the ideal shot was 3,040, 45, but it fell short, but it still reversed right there with some help from Trump.
You ever notice, I put this out, I know I'm interrupting again, but you ever notice, Barack, you've been doing this for a while, that when everyone is looking for one number, a month in advance, 2 months in advance, people were talking about a 30-40 to 30-50 top.
That's right. Yes.
Right.
I was looking 30-30.
Yeah. So, when everyone's looking for one scenario and one number, it either doesn't achieve it or it becomes almost meaningless when it does. Just something I've noticed over the years.
Yeah.
Have
It's
you?
you're right, because I can see, in the Twitter space, everybody was plotting this
Oh, yeah,
overhead
it was going to be a
resistance,
layup with the
like
Fed, the Fed,
yes.
yeah, Powell will drive it up there, everything. Yeah.
That's right.
Anyway,
Um,
Mr. Market's a mean guy.
yes, he's messing things up sometimes. But then technical analysis is kind of useless when it does that.
Yeah,
But yeah,
it's
we have
not
to live with
useless.
that until the volatility is over. We have to stick to our guns and probably hold off. Once the volatility picks up, I wouldn't say all the technical analysis, but especially my work doesn't really function, because if it's a very huge moves, then these lines, the technical resistance and support lines, tend to get pierced very, very easily, without showing any kind of reaction. And that's where I kind of try to step back and wait
Okay, so
for things
channel
to
work
settle
is
down.
okay. So you're saying that channel work is less
That's right.
reliable during times of higher volatility.
I would say, I mean, if you're looking at any technical analysis, let's say, even if it's moving averages or indicators, Fibonacci's, the volatility based on news is kind of hard
Okay.
to handle.
Yeah, take
Everything kind of
bombs.
falls off. I mean, this is where Trump tweeted. I
Yeah.
mean, unless
But
you've
you
gone
know
in
what? It was
there at that
technical.
resistance. Yeah, it was
Yeah,
technical. The
it was
entry
technical. It was
was really technical.
78.6 back and
That's
right
right.
to your line.
Yeah.
It
Yeah,
wasn't
that
easy
was
to sell it,
that's
but
right.
it was
That's right.
technical. Yeah.
Look at this is the first crash, and then bounce back really hard, and
Yeah.
then here. So it's kind of, you doubt, obviously, oh, is it gonna smash through, or
Right.
really reverse exactly where it should? It's kind of like really difficult, because the volatility comes, if you're trading with leverage, it can be very, very damaging.
Nerve-wracking.
So the recent law was the bottom band of the orange kind of interim channel.
Okay, and
As you
you
can
had
see, the
that
bounce
trend
was
line
quite accurate.
drawn. You had
Yes,
that trend line drawn before it
yes,
got there on the bottom, and you had that
exactly.
brown channel drawn at the top before the recent
Yeah, this
hit
is
up
Dow
there.
Jones, the same thing.
Okay.
So I always look, of course, obviously on all the markets. So it's about 4 indices in the US. So I was looking into all of these. This is Nasdaq and the blue bottom band. So the ES, Dow Jones, and Nasdaq all found their laws with their relative channel supports. Of course, as you said, this wasn't a support until the bounce. So you have to you can't just buy here. You have to wait until the market reacts. This is a speculative support until the market confirms it, and that's where you know uh, it becomes a setup. So it is a setup, speculative setup, and then once the market moves, then you may enter at the first big bounce.
Yeah,
If
because it
you're
certainly
if you're
was not
buying
a
here,
yeah, that was not a candle you would buy.
yeah,
And and it wasn't even a reversal candle, it just started
mhm,
out like an inside bar. So you're
yes,
right, very hard to
very hard. Look at
go.
the
Yeah,
volatility here, and then
yeah,
it's like a bipolar market, really.
yeah.
Um, Now the current move. Yesterday, the blue short-term channel was broken, but the green. So I'm watching for this green sideways interim uh, channel, like a sideways channel, which is also looking at the triple resistance. This two red resistances. As you can see, the
And the
overhead
green
resistance.
line,
The
there's
green one,
confluence there.
that's
All of
right,
them
and
are
the blue
there.
one here.
Okay, what
So,
happens if we take that out and close above it? Where are we going?
well, that's then you just buy it. Really, I would
Would you
buy
have
it
a target on something like that?
3,000,
Okay,
3,000.
okay.
I reckon at the like eventually we'll gain back all of this. This is the Trump tweet.
Okay.
And it's news driven, so I'm guessing there's a lot of liquidity gaps over there, and that's where we're going to be headed eventually. But we may get a pullback, maybe here down to the green. But I don't do these kinds of like, oh, it will come right down here. I'm more like, I'm getting ready if the resistance breaks out. I'm getting ready if it comes all the way down to the green bottom band. I would be a buyer again. Those sorts of things. Like I don't put scenarios in front of me, but more the setups. So on the Dow Jones, the blue resistance that was broken recently, 1, 2, 3, 4, 5 touches, and yesterday's low, basically, just a second, is the 2 hourly. You can see the back test on that broken resistance, and now the black one is breaking up right now. So it's kind of short term. It's becoming more bullish. The target for that can be all the way up to the blue top band. But of course, there is a broken green channel yesterday, and the back test of it will probably act for a while at least as a resistance.
You ever notice back tests being more reliable if the back test, say it's from a broken uptrend, is not a new high, but a back test that's a lower high than a back test that's making a new high?
That's right. I mean, back tests are always better to trade because your stop loss is much better defined and much tighter. So if you were buying the breakout off the blue resistance here, you are opening yourself for a back test which is much lower. So even you're buying here and it comes in back test, you are already underwater. But if you wait for the back test and wait for the market to act on it with a bounce, then it's better to enter. Back tests don't always happen, but I think they happen more often than not.
Okay.
So on the NASDAQ, as I showed the blue channel, the interim resistances are here on the blue. And the red channel is probably, I'm not very happy with the accuracy of that red channel, but it's still what we have at the moment. And the golden top band may be also the boundary, may act as a boundary. And if it stops and reverses there, it may break the red channel to the downside for another pullback.
A lot of options. Almost sounds like CNBC analysis.
I think it's more like I'm watching all of them. So some of them are contradictory. But I'm watching all of those. So if I see ES has overhead resistance, and then I see NASDAQ has also overhead resistance.
Got it.
All of these things can make me a little bit more biased to the bearish side. I don't only act for So similarly, this, for example, right now, the Russell just broke the golden top band. As you can see, this is 2 hits on, actually maybe 3 touches on the bottom side, and the third touch today just breaking out. I mean, yesterday's bearish breakdown was short-lived, and the blue one. Now that it's making a new high above the blue channel's top, we can basically say this is going higher.
And this has been the weak sister. So if even the weak sister is showing some signs of a heartbeat,
that's right.
Would you view that as constructive for the overall market?
Yes, I still look into this. This is the Trump's tweet. I still look into that as an eventual target. You can see the double resistance as the red ones here. There's like a confluence here. That one and that one, quite similar to 1 second, it was the I think S&P, a bit farther away though, but Russell has its own rhythm, to be honest, in the last couple of months or even the last 2 years. On FTSE, this is Europe, UK. the golden resistance or golden interim channel, this is an hourly chart, is holding it off. I mean, this was a nice breakdown, but then it's now recovered and almost fully all the way to the golden top band. And if it's broken, I would expect more upside. And DAX is the most bullish of them all. Looking at this beautiful golden channel, which was broken just this morning, together with the diagonal blue resistance, and any back test towards here may be a buying option, a buying opportunity. So looking at the Forex, this is the daily chart on Euro. The blue channel was broken back in June, and it got back tested already 1, 2, 3 times. This one was quite deep. There was some news action here, but the golden support also held it there. And now, if I get a bit closer, the red broken resistance, it held at the back test, but it's now breaking it out again. So it's a little bit, let's say, congested area.
Should
it's
I
not
give
very
it
clear.
Should I drop an antihistamine on my Euro chart?
Yeah.
Because it's congested.
It is.
All right.
Yeah,
I can't help myself sometimes.
Yeah,
buddy.
it is. It is really. Like, I don't know. Like, there's so many forces in play here, and I mean, the black channel yesterday, for example, is broken out. And
you
now
follow
the blue,
sentiment at all, though,
one.
Barack? You know, I mean, it's hard to find a Euro bull. It's hard to find a cable bull. Hard to find a dollar bear.
Yeah.
So I mean, we know which way the market is.
Yeah, especially on the cable is very loaded to one side. I'm aware of that.
Yeah.
So yeah, if Euro clears this blue resistance, it may come back to the green one, which has held countless times recently. You can see 1, 2, 3, 4, 5, 6. It's quite ripe, and it may break.
Where would that come
in?
Around
Upside,
1160 or so?
This is it's about around, let's say, depending on how fast it gets there, it's 1170-ish.
Okay.
1180-ish. We have to watch that resistance.
Okay.
Through
there, I'm thinking 114.
Yeah. Yes. I have the same number. More, if it breaks, it can go all the way to 114. Yeah. So this is the US dollar index.
This is a great chart. You know why?
Why?
I'm kind of looking for a dollar shakeout, and I don't have this channel that you have, but I have a speed line that comes in that would shake out everyone who's long that last low we had in June. If we went back down there, and we'd still be in an uptrend.
Yeah.
And
it is still an uptrend, but yes, it may come all the way down to this blue one again.
Where does that come in? 5.5?
This one is that's exactly right.
My target. So I do this to edify the community, but you also help me. Okay, so you're here today, and you know what I mean. You probably follow some people, right, Barack?
I am. I do. Yeah.
And you have your own ideas and everything, and you see what someone else is seeing, and they may use a different method than you, but it's pointing towards the same outcome. Doesn't that build your conviction if you respect that person's work?
Absolutely. Yes, that is kind of, there are different ways to skin this cat, right? I mean, some people come to the idea with Fibonacci's or indicators, anything. But when you have a confluence of, good ideas, this can happen, then I'm fine with that. Absolutely. It gives more confidence to the idea. On the dollar index, this is the weekly chart.
Big picture.
It's quite. I would expect maybe eventually another touch on the green top band, but maybe after it comes down here, a bounce and break it all the way up there to 102.
Oh, okay.
Yeah.
Love it.
This is weekly, so it will take time. On the
did you read my mind before you came on here today?
Are we parallel?
We're on the same page on the dollar. Okay.
Good. So on the pound, so the bounce was the green support. I had the green line. I didn't call it until it bounced. So obviously it needs 3 touches to be recognized by the market as a support. Otherwise, it's just a line toward, through two highs or 2 lows. I always say, the 3rd touch and the market should confirm it, and that's what it did. So I saw this, I think, on Steve's the blue channel. I think I saw it on Steve's charts. This is a very, very accurate one. And I'm guessing even if it bounces, it will stop there for a while, at least for a while. That may be a short opportunity for a scalp, or maybe like 100 pips. But for now, the black channel and the golden channel. So the golden channel is broken and it's getting back tested. There is a red resistance, which has been tried for maybe 4 times since actually yesterday it tried twice. And if it gets cleared, then I think we'll get to the blue resistance.
All right, let me ask you this. The more times the market knocks on a door of a line, is it more likely that it gets through it with more tests of it, or less likely?
More likely.
Okay, that's what I thought you'd say.
Eventually, especially if it goes to the fourth touch and it reverses again, I get more excited, because the 4th touch is a much better confirmation that the market sees that as like a wall, and once that is broken, the move to the other side is stronger, actually.
Yeah, it's like, why is the market making it so convenient that I miss the first rejection and the second and the third? But you know what, Dale, I'm going to let you in on the 4th rejection. You could trade this trend line.
All right.
It
exactly.
might be 2 weeks.
That's what it is.
2 weeks later, but you're such a nice guy. We waited for you to be able to
it tells you something. Yes.
Yeah.
Yes. For example, on a rising channel, it's very rare to get 4 touches on its top band. The 3rd touch usually causes the reversal to break the rising channel to the downside. But if you get the 4th touch and it reverses there, then it's almost like it's going to go down really hard and break it to the downside. That's how I feel it. Unless, obviously, there are cases where the 4th touch breaks it to the upside, then it's a huge buy signal, because once the market breaks a rising channel to the upside, that is new buyers coming in, and it's really strong. So for me, it's a no-brainer to buy.
What do you do about false breakouts? Like, say you cut through a trend line, it's a breakout, but then that line that it broke out of a day or 2 later is negated. You're gone.
It is.
That happens.
So if it, I think we can show it here. Yesterday I was.
And do you have to wait for the close of the candle to know whether or not you don't anticipate how a candle is going to close, right?
If the line is very well defined with really accurately,
you'll trade the line and look for confirmation.
Yeah, okay. And if it doesn't hold at the back test and it goes straight into it, then I would be like, I mean, this didn't work out really. Even the best setups fail. But that's what lines are for. That's what the visibility is there for. I mean, it doesn't leave any guesses. Sometimes it goes. So, for example, yesterday it happened. So this green one had 3 touches, and then it looked like breaking down, but then it immediately went up and broke the black channel to the upside. So if this kind of fake happens and it breaks to the other side, then you obviously have to change your stance and rethink your trade. Okay, so Ozzy, I've been looking into this red resistance breakout, and it's obviously like really slowly moving, but it was back tested a few times, and the last one held. So currently the golden resistance, which had, you see, 3 touches, and the fourth one is breaking it. And I think for a confirmation, the green top band should be taken out. Otherwise, it may fake again, or it goes up, comes down again, and the fourth one breaks it out. Then that's really the ideal case.
Nice ascending triangle. Yeah.
Here is there are 2 channels in play. There's the golden one on the kiwi. There's an hourly chart, and the top band, it has 1, 2, 3, 4, 5, 6. You can see it's trying, but there is no success yet. But the blue channel was like a bear flag. Yesterday it broke it down, made a new low. Now the bear flag is broken back in, which is a bullish signal usually. And kiwi may get to the blue top band, and then if it breaks that and the red one, then there is some space to cover to the upside. So last but not least, I'd like to cover some of the commodities. This is oil. The blue support got tested, so this is the third touch. The blue top band is speculative at the moment because it didn't have any touch apart from the first. For now, the red resistance is broken at the maybe 1, 2, 3, 4, maybe you can say 5 touches, and it was broken just yet today, which is why I bought it. And now I'm hoping it's going to get to at least 60, the green top. To capture the recent major low, I was also chasing the Brent. Sometimes West Texas Intermediate doesn't give very good clues, but then I check the Brent oil, and that's where this is a weekly chart, daily, but all the way from 2015 low, and you can see the perfect channel, and this is the bounce that we get. A little bit damaged, but it's still held, and we are now clearing this blue resistance here.
Yes.
It came down, and now it's clearing. The golden channel is cleared, so I'm guessing we're going towards the blue declining resistance, and maybe it's gonna be broken too. On the nat gas, it's very, very let's say critical levels here. Sorry, let me show this one first. We are still underneath this golden resistance. I'm not very happy with the accuracy of the bottom band, but currently that's what I have only, and it's holding for now, that golden resistance. And more accurate is the blue one, that is 2, 3 touches at the top and another 3 touches at the bottom, and the green support has 3 touches. So I reckon, and I'm short actually nat gas for quite some time, and we've been shorting, and now as long as this golden resistance is holding, I'm hoping the green one will break and we get to the blue bottom support at the 4th touch. It may break it to the downside. That will take it to 1.6. Why I'm very, very, very bearish is this long-term horizontal support that was cleared here, this one.
I see.
Yeah, so this was what 2016, 17, 18, and it was broken and back tested recently. So that is very, very extreme bearish development. So I don't think there is. Maybe we can revisit the 2016 lows at 1.6 at some point. Gold. Let me show you the very quickly this overhead resistance. This was the breakdown point back in 2013 after trying quite a few times. So I'm guessing this level is 1554, 1555. And I'm guessing this is going to act as a resistance, as the previous support act as a resistance. And there is a confluence with the red top band. And there's a red top band. If it causes together with the green, then, and obviously the sentiment you talked about, it is extremely bullish right now. On gold and all the precious metals. So it would be good to have one last push, which is also the golden top band. So you can see the confluence here.
Yeah,
it is 1555, and that's, maybe we get there after testing the blue support again.
Okay.
Right here.
That would be a third drive up there too.
Mm-hmm.
All right, nice look.
And last but not least is silver.
Yeah.
Silver just touched the blue broken support. This is daily chart.
Yeah.
I'm always using log scale, by the way. Just wanted to make point it out on commodities, especially when the price goes in power of multiples. The log scale is extremely powerful compared to a normal scale on the price. You wouldn't be able to see this blue resistance on the normal scale, but the log scale is super accurate, and that's where silver actually, you can see how accurate this was. Yeah, this is like to the last pip. It reversed there, and it was also the green top band and the blue resistance.
You're bearish. You're looking for major shorting opportunities.
Yes.
In metals, aren't you?
Currently, because of the sentiment and because of the extremes.
What's that big black line?
And the prices. Sorry, I'm going to get to that. I'm going to show you this red one here.
Okay.
Yeah, the red resistance, blue and green, they were all lined up at the top of the spike. This black one is just the recent resistance that is breaking up. So maybe we get one more high to touch the green top band, just around 1740, while gold makes its move to 1555. And then I'm, I would try a short there. Yes, the red support rails break would be kind of a confirmation. But of course, the golden, you see the golden channel that had quite a few touches on the top. It broke it and back tested. For a major reversal on silver, a bearish reversal, silver has to come down below that golden support. That is
1670.
1660.
Okay.
And that's where I think it will clearly turn more bearish. But for now, yeah, I'm just looking for setups. No real no trade at the moment.
What a great run through the markets, Barak. I really appreciate it. What's the best way for people to follow you? Do you have a website?
Yes,
It'd be a good time to show it. So
can you see this one? You can't see this one, right?
The silver?
Because it's okay. I only shared it's tradingchannels.uk.
Okay.
So I'm just